So the tax planning mistake number one is the failure to find out from your CPA what your tax rate is, how much are you paying in federal taxes, state taxes, city taxes, Social Security taxes in your business. You really need to know what your tax rate is. Everybody's trying to make more money. And what you're going to find out here, depending upon your type of entity that you are for tax purposes, you may be paying significantly a lot of taxes that you're not aware of. And so part of this process, to me, when you do tax planning, is you really, as a business owner, need to know what your tax bracket is so that when you go forward, you understand the importance of making sure you're maximizing your deductions and minimizing your taxes. So if you go into the outline, back there's behind the outline is Exhibit A, and then these are going to be tools back behind the outline. If you go to page 205 on the bottom right-hand corner, you're going to see an example of a business owner that's married, and so you might be able to also on page 3 of the tax planning guide that's in your booklet, it has the current tax rates for yourself if you're married or single. You might want to refer to that because I want you to be looking at your tax bracket. A lot of business owners are Schedule C sole proprietorships. It's not uncommon to have that tax entity, and so we're going to start there. You'll see in this example that if you're married and you're a business owner and your profits are between $75,000 and $150,000, that's your taxable income, the federal tax bracket is 25%. I'll give you an example. I had a client in last week. She is getting audited by the IRS, and she wanted to come in and review things. And it's not unusual. Her husband's making a little bit over $100,000. Her taxable income last year was $90,000. She made $32,000 of profit last year as a business owner. So when you take $90,000 and you look at $75,000, I was able to explain to her that $15,000 of her profit last year was subject to federal income tax at 25%. The amount below that, the other $17,000, almost half of it, was subject to federal tax at 15%. So that's just the starting point, though. Okay, it doesn't stop there. Look at the handout on page 2. You'll see that because she's subject to Social Security taxes as a business owner, the Social Security taxes are 15%. So half of her profit is, you pay federal taxes at 25 and 15 is 40%. The other half of her profits were being taxed at 30%. And then you have the state taxes. I say 4%, Kentucky's 6%, but you get a tax deduction for it. So if you're in a 1/3 tax bracket, I just kind of rounded it off. If you're in Kentucky, you'll